A lot of what works for ADHD entrepreneurs does also work for neurotypicals. We'll just spend less money. It doesn't work for individuals with ADHD because, well, what is less money? How do you not know how important this thing is to me in this time and space? So being able to have clear, easy to see boundaries and guidelines is really critical for ADHD entrepreneurs.
Welcome to the Process to Profit podcast, where we find out about the key processes and productivity techniques that drive successful service-based businesses. Whether you're just starting out or looking to scale, join us as we uncover practical strategies to streamline your operations and help you make more money by boosting your profitability. Let's get started. My guest today is Sherry Andrew. Sherry, why don't you tell everyone a little bit about yourself?
Of course, I'm so glad to be here. And I am a financial coach, and I have been a financial coach with my own business since 2018. And my focus is on helping entrepreneurs, specifically service-based entrepreneurs, with a focus on entrepreneurs with ADHD, because we've got some special needs when it comes to managing our business and personal finances and being able to have easy to manage systems. And my focus is on not creating plans with rules, creating plans based on who you are as an individual and what's important to you, and designing your money around what you want your life to look like.
That's great, and that's precisely kind of how I build my plans. Is I want to build systems in your business around how you think and how you work. So I love that approach. So you work specifically with people with ADHD. Can you tell us a little bit about sort of what the difference is in, how people with ADHD think and work, and sort of more neurotypical people? Neurotypical, is that the right word?
Yep,
Okay.
yep, yep.
I don't want to be derogatory, so I want to make sure. Okay.
We tend to be impulsive a lot, and that can lead to impulse buying, both on the business and the personal side. That courses that went somewhere to die is pretty common for ADHD individuals and entrepreneurs, where we think we're going to do something, we're very excited about it, we invest in the course, we maybe dive into it for a day or two, and then the interest sputters out and we don't get back to it. So we never actually have that impact. So the systems that I help my clients set up are all around having clear, easy to see boundaries around, okay, you have this money to spend for this type of thing on the business and the personal side, using visual cues so that you're able to easily see things. And a lot of what works for ADHD entrepreneurs does also work for neurotypicals, but not necessarily the other way around, because we'll just spend less money. It doesn't work for individuals with ADHD because, well, what is less money? How do you not know how important this thing is to me in this time and space? So being able to have clear, easy to see boundaries and guidelines is really critical for ADHD entrepreneurs.
Yeah, that is making a lot of sense. It's funny. The more I talk to people who specialize in ADHD, the more I'm thinking like I should go get checked for it, because a lot of what people talk about, it's sounding very familiar. So like the having visual cues and so just a little eye-opening, and potentially eye-opening for some of our listeners and watchers here. So how do you normally like to, I know you talked a little bit about sort of the difference, but how do you normally like to approach your work with people that you work with? What's your strategy for helping them figure out their business finances?
The first strategy that I dive into is really getting to understand them as a person and talking about their future and what they want their business to contribute to their lives overall. And being able to, people with ADHD, we're often it's now or it's down the road, and we don't think about it. So we live in the now. So helping to get them to fast forward to think about, what do you want your business to do in a year and 5 years for you and your finances and your life? And where do we get to that point? And learning, what's worked for you in the past? What have you tried in the past? Because often people have tried a lot of things with their money. And I find individuals with ADHD often have tried a lot of things and given up pretty quickly. So having that support system beside them really is impactful. Initially, working together, it's finding what's best for them And then future, so for my longer term clients, it's about that accountability to, okay, you wanted to do this, and we know this is the best for you in your long term finances and your business and on the personal side. Have you done it? And quite often, the first 2, 3 months, there's a lot of excitement, a lot of things going on, and then after that, that accountability really tends to kick in to be able to, "Oh, crap, I'm meeting with Sherry tomorrow, and I said I was gonna do this, this, and this, so I better get to work," because urgency when it comes to that accountability is really huge for ADHD individuals.
Yes, this is all sounding very familiar. So yes, the urgency, you know, I don't know what I was gonna say there. Um, so it sounds like, you're really all about sort of customizing your approach for how they think and how they work, which is great. How does someone know, at what point does someone realize that they need a money mindset coach? What either tips them over or, what's going on in their lives that they finally realize like, hey, I really need help with this. What are some of those symptoms, I guess?
That's a great question, and that's one of the things that I ask during my free consultation with potential clients is, like, "Why now? Why were you looking for somebody like me at this point in your life?" And a lot of times it comes from either they're in a period of transition or they want to be in a period of transition. So for me, the path that led to finding this as a career in a business was a job loss. And for others, sometimes it's a job loss, an inheritance, money coming in that they didn't expect or plan for, or they want to move full time into entrepreneurship and they're not sure how to navigate that or how to know when financially they're able to do that. So and also, unfortunately, a lot of times it is people just getting to the point where they're so overwhelmed and they've been in avoidance mode with their money for so long that they know they can't keep doing that because of the stress and anxiety that it's creating in their lives. Sometimes that's a big tax bill as well because it's great when you earn a lot of money in your business, but if you're not planning for that and you file your taxes one year and you end up with thousands or tens of thousands of dollars owing, that can really tip the overwhelm scales for entrepreneurs.
Yeah, I talked about this on another episode, but I had an issue last year where I converted to an S corp, and it was the right move at the time, but it wasn't the right long-term move, and it ended up creating a lot of financial stress, and I had to kind of walk it back this year and work with a different person to kind of fix it all, and it was very stressful. Unfortunately, I was paying enough, so I didn't have a huge bill at the end. I did owe some, but I wasn't, I didn't have a huge, but it was so stressful to like figure all of that out, and then suddenly my income drops and now I can't make payroll, and what does that look like? And so I totally understand the stress around money. So how can entrepreneurs sort of reduce that stress of or that avoidance of just saying like, if I don't look at it then it's not happening and I can stick my head in the sand and pretend like nothing is wrong? How can entrepreneurs kind of overcome all of that?
A, having support, but B, like the approach is really ripping off the band-aid and going from not looking at anything to looking at all of the things and really getting an understanding of where you stand. Because I hear this from first time clients all the time. The first session when we work together is all about looking at all of the numbers and getting a very clear understanding, building a plan, and before that session, they're filling out some prep work. And what I hear a lot is at the beginning of that very first session is they felt relief just by filling out the prep work because when you're in avoidance mode, you build up in your head, oh, it's got to be so bad. And we create a much worse scenario than what our actual reality is. So then when we peel off that band aid and we look at our reality, it can bring a sense of like relief and calm and understanding of, okay, this isn't so bad. I can handle this. What's next? And when you tell an ADHD entrepreneur to cover your business expenses and to cover your personal expenses and be putting money away for taxes with all of these different systems and percentages, you need to make this much in your business to do all of that. They're like very, okay, I've got this. I'm going to figure out how to do this. Because they have that clarity, we get really resourceful and we figure out how to get to that number.
Yeah, and I think that clarity is really the key, right? Because when you're sticking your head in the sand, you don't have that clarity. You don't know sort of what that number is, and you don't know what you should be striving for, and you don't know any of those things. And at some level, it's kind of, nice to stick your head in the sand and not think about it. But like you said, at that higher level, like that stress is in running in the background, and you're constantly probably thinking about it, even if you don't want to be thinking about it. So just facing it, I think, is a really key step in pretty much like they say in AA, the first step is admitting you have a problem. So it's
Yeah.
important. It's important to recognize it.
And I think also subconsciously, we hold ourselves back when we don't know that answer. What should I be putting away for taxes? We hold ourselves back because we're thinking, oh, the more I make, the more trouble I'm creating for myself down the road with taxes. So if I don't sign this client for this big project or don't, you know, go down the road of creating this new group program or something that you want to do that you know is going to be profitable in your business, you feel more free to be able to, okay, I know I've got a clear system. I've got a number I'm putting away for my taxes. It's good. I can make as much money as I am able to in my business and sleep okay at night because I am confident in what I'm doing with my finances.
Yeah. So speaking of systems, what systems do you recommend entrepreneurs sort of put in place to manage their finances? And I know it'll be customized to kind of how they think and how they work, but overall, what are your general recommendations for the systems behind managing your finances?
Yeah. So I use personally and help my clients set up a modified version. I'm sure you've read the book, The Profit First System, to be able to see exactly what's coming in your business in a specific time period and know exactly where it needs to go based on these customized percentages for you and your business. So, what is your business income? What are your business expenses? Where do you live? Do you have to charge sales tax based on where you live? What percentage do we need to put away for all of those things? And as your business grows, we look and we modify those as needed. But having that, okay, here's what's in my business bank account. I plug that number into a spreadsheet and it calculates everything I need to do for me to move the money to where it needs to go. And then that clarity around, I have this much to spend in my business on expenses. So if you're considering adding something as a recurring expense or adding a one-time expense, you're able to see really clearly if it's a yes or if it's a not right now.
Yeah, and I love that way you phrased it. If it's not a no, it's just a not right now. And that was a lot when I worked in the federal government. That was a lot of like you had to say no a lot of the times, but it was never a no. It's always like a not right now and we'll do that later and that's not a priority. But it's never a no. And one of the mindset shifts that I had to make in building a business, because when you're building a business, there's not always a lot of income to come in. It's not, "I can't afford that." It's, "That's not in the budget. That's not in the plan." That's not
Yep.
something that's important to me to spend money on right now. So how important is the mindset aspect of this, of, how you think about your money, how you know, let money sort of rule your mind? Like, what's the importance of mindset? And then what are some mindset shifts that people can make in working with their money?
I think the practical part of it, the knowing the numbers and the mindset really go hand in hand. I think independently working on your mindset without digging into your numbers is a lot of unproductive time because the two really do go hand in hand. And it impacts you in so many ways when you're an entrepreneur, especially when you're having regular sales conversations with people to welcome them into your business or to see if you're a good fit to work together. Because when there's that desperation, that need of, "I have to close this sale or I'm not gonna be able to do this, and this," and maybe that's pay my bills on the personal or business side. So being able to make that shift allows you to welcome more people that are a good fit into your business without it feeling sleazy or slimy because people feel that, especially neurodivergent individuals, because we've got that sixth sense for people. And the biggest mindset shift, you hit on it, was that phrase, I can't afford it. And this is so common You hear lots of people say it to their children, and often we say it because it's not necessarily that we can't afford something, it's that we don't want to, and we're using the "I can't afford it" as a quick way to shut down a conversation instead of, really stepping up and being brave and saying, "That's not something that's important to me right now." So maybe your girlfriends ask you to go on a trip and you don't want to because for any reason it doesn't fit into your agenda, and you say, "I can't afford it," which kind of stops the conversation because who's going to push and argue with that versus that's not something that I want to do. It's not a priority for me right now. You can get more pushback for that and really have to dig your heels in. And I think as a parent, when you say that to a child, it can create that scarcity mindset with your children, and they can have a different take on what their finances were like in their household growing up, because that's where we really get either that healthy relationship with money or we can really get messed up to like, oh, I grew up where my parents always said we couldn't afford that, we couldn't do this, we couldn't do that. And maybe there was, not that income to do it, or maybe your parents just didn't want that video game system or whatever in their household, but they were just going that short path to stopping the conversation.
Yeah, and I think what a lot of people don't realize is what comes out of your mouth kind of it really impacts your mindset. Like even if you think you're thinking, "Oh, it's not in the budget or it's not a priority for me," but what you're saying isn't that, then it can really play with your mind. Like it can really, shift what you're actually thinking. So I think it's important that we're verbalizing what we actually mean and not, with children it's a little different because they're not going to understand as much probably.
Yeah.
I'm not a parent, so don't take my advice on that, but I think we have to be really aware of the things that are coming out of our mouths and how it actually impacts our mindset and what we're thinking. And it's funny, you talked about profit first, and it reminded me, I bought what I thought was the profit first for people who are contracting with companies. It was profit first for contractors, and it wasn't. It was profit first for like general contractors for like working on houses. And so I listened to like a third of the book before I really realized like, no, this guy's really talking about like handymen and not like, normal contractors that I would think of. So that just made me I didn't finish it because it wasn't really relevant, but I did read the regular contract
Honest
profit
mistake.
first, yes. Because you're like contractors. I'm like, oh, I was working for lots of companies at the time, so I was like, oh, I was a contractor. It's for me. No, no, not the one that I really needed. So how can entrepreneurs, who are maybe used to being employees, how can they start balancing their finances of paying themselves, but then also keeping money in the business and also, reinvesting in themselves? Like, how can they balance all of these different demands on their finances when they're probably used to having a regular paycheck for an employer and, the health insurance is already taken out and taxes are already taken out, but now you have to kind of think about all those things. So how can entrepreneurs, especially new entrepreneurs, start balancing all of these different demands on their money?
And the long-term goal for any entrepreneur I work with is to put yourself on a salary from your business, because then that creates stability, even though there's going to be ups and down in your business from month to month, having that stability as far as income, which also creates the ability to see when is it time to give yourself a raise. And that looks very different for every entrepreneur because there's some that have a lot of seasonality. But the sooner that you can put the profit first system or something similar in place, the sooner you can create that stability. And it's challenging when you're further down the road. So when you're a new entrepreneur, maybe you're starting as a side hustle and you have a regular job, so you're able to build up some buffers in those different accounts. The sooner you can start, the better. But if you're down the road in your business and you're currently like, this sounds great, but how do I do it? Because I need this much to live on and I need this much to pay myself to be able to cover my personal bills, but you have to do all of the things. So that transition can be a little difficult, and it can often mean a little bit of short-term pain for that longer-term gain. So if you're down the road in your business and you want to implement this system, it can involve looking for ways to cut back in the business and the personal side for a short time so that you can build up some buffers in these accounts so you can get to the point where you're paying yourself consistently sooner. Because especially for ADHD entrepreneurs, we tend to spend based on bank account balances. And in our business, that often means we have one account, and the higher that balance is, the more we spend instead of, oh, chunk for taxes, chunk to pay myself, chunk for these annual fees that I know are coming up. And the same on the personal side. If you're in the habit of bigger month on my business, I'm going to transfer more to the personal side. That could increase the personal spending. So it's all about creating that stability, but it's challenging when you're first starting out to put these systems in place when your business is your full-time job, your full-time paycheck.
Yeah. And it's funny you mentioned like seeing the amount means that's how much you have to spend. I learned even before I became an entrepreneur that I needed a bank account for my bills and then a separate account for like my grocery money, my gas money, like my weekly allowance basically that I would give myself. And in my business, I've done the same thing. I have a business bank account, I have a separate tax savings account, and then I have a separate, my bills account for my personal and then my allowance account so that I'm not like looking at my business account going like, oh, I have all this money in the bank and I can go up to the outlets and go on a shopping spree. Like, no, I don't even look at that account unless I'm actually doing some sort of activity or some sort of planning or something. And it's all in a spreadsheet and I know how much is coming in and how much is going out and all of those things. And the only debit card I carry is that one for that like grocery account, and none of the other debit cards come with me because I know myself and I see something and I look at the app and it's like, oh, you have that money in there. I might as well just buy it. No, I don't even carry those debit cards. So great, great advice for people. So, thinking about that, like, how do you recommend people? I know obviously we should have a separate business and personal accounts, but, how do you recommend people set up their accounts and their systems when they're just starting out and maybe they don't have that buffer to keep in their business account to cover those expenses? And maybe they're even covering some expenses from their personal money. Maybe they're still working a full-time job and they're sort of, paying into their business. Can they just go and use that personal credit card? Like, what does that look like?
Well, you can, and this also depends on your business structure. So most people start out as sole proprietors. So you can have that crossover as long as you're tracking things, but the sooner you can start a separate business account, even if it's one account, even if it's a different personal account, and obviously there's different rules depending on where you live. But my first recommendation for somebody starting out as a sole proprietor is to have a separate personal account and ideally a separate credit card that you're using for just business expenses, because also with ADHD, we're not super good at organizing all of our paperwork and receipts. And if you go out and spend $500 on something for your business from your personal account and the receipt gets lost in your email or lost in a physical folder, that then becomes $500 of an expense you miss. So then you're actually paying taxes on that $500 as income because you don't have that proper paperwork. So if you have that separate account and credit card, you can easily go through and see, or a bookkeeper can go through, or you can link it to a bookkeeping system. Also, the sooner you can do that, the better, because I'm a big fan of QuickBooks, but when I first started out, I was using a free program that was similar to QuickBooks. So having those automations and prompting, there's this $500 expense. What type of expense was it? Where should it go? Versus a receipt lost off in the abyss somewhere is going to help you make sure you're optimizing your deductions. Because when you're first in business, there are a lot of expenses depending on your business structure. And if you're paying for business expenses out of your personal account, that can look like a transfer from your personal account to your business account. And then you can still pay it out of that business account. And then that transfer, what you've put into the business, then becomes trackable. So then down the road, when you are profitable, you can pull that out and pay yourself back on the personal side. So there's a lot of moving parts when you first start a business. And for lots of entrepreneurs, especially ADHD entrepreneurs, we might not want to look at the finances because it's not something we enjoy or we're passionate about. We think, oh, we'll clean that up at tax time. But the bigger the mess, the harder it is to clean up. And that separation of accounts makes it so much easier to clean up when the time comes.
Yeah, yeah, and that's, that's one of the things that I think people don't really realize is how big of a mess you can create if you're not ever looking at it, and then suddenly the only time you look at it is at tax time. So a lot of bookkeepers will charge you more for a cleanup than they would to just do do your bookkeeping year round. So it's worth looking into getting a bookkeeper, or at least getting a system in there for organizing your expenses before tax time, and don't wait until December to do it, or January or April
And
to
and
organize it.
don't pay an accountant to clean
Yes.
it up. Pay like, a bookkeeper is, like, there in the weeds. The accountant is like, yes, they can do the bookkeeping, but they are gonna charge you through the nose for it, and, yeah, a bookkeeper will charge more typically for cleanup because it's harder for you to remember what that expense was from last February when it's following April and you're trying to
Yeah.
get taxes done, and it can be just a big mess, and it can be a deterrent for you to do your taxes too. So then that mess pushes your taxes getting done. They're no don't get done on time. There's fees
Penalties.
and
Yep.
yeah. So the sooner you can get a bookkeeper involved in the business with you, it's one of the first things I recommend my clients outsource in their business as soon as they're able to afford it, unless in the rare case they're interested in learning a new system like QuickBooks. But being able to outsource it early in your business can bring such a relief, and then your bookkeeper can just send you a report and you can send it on to your accountant, and then you're saving so much money in the long run because you're not paying all those extra cleanup fees and late fees and penalties and all of those
And
things.
losing expenses and forgetting expenses because you're doing it more frequently. And it's funny you mentioned not paying an accountant. That was one of the mistakes that I made last year, was paying an accountant to do my bookkeeping as part of the whole S corp thing, and it was just supposed to be a cleanup. And yes, I have lots of ire around that whole situation. But anyway, so we've talked a little bit about profit first, but I realized that we didn't really define it for people who may not know what it is. So can you tell us what the profit first system is, and where it came from, and how you implement it with your clients?
Awesome. I'd love to. So it's a book by his first name is Mike, and I'm not going to attempt to say his last name because it's a mouthful.
I was looking to see if
And
I
like you
had it on
mentioned,
my shelf to show the book, but I don't think I.
and he does have a lot of specialized editions now. I haven't read any of them. So there's the core Profit First book that is more general, and you can read that and implement it in your business. But they also have like Profit First is for hairstylists, and like you mentioned, for contractors. So lots of different individualized books so that they're more targeted at your career, your job, your business. But the core of it is setting up separate accounts and creating those separate piles of money. So money goes into one account that does all the heavy lifting. So it collects all of the money, and the money sits there for however long it sits there based on the time period and the frequency you want to distribute that income. The core of the book, I believe, says on the 10th and the 25th to do it, but that doesn't work for everybody. And for me, I do it once a month because I think, why do it twice if I can do it once? And some people do it weekly. Some people who, like real estate agents who have larger incomes less frequently, sometimes they do it every time they receive a commission. So it's all customizable based on how your income comes in. And then you do an income distribution based on the percentages that you have set up. So the business accounts that you distribute into are your the account that you pay yourself out of, so your salary account, an account for your business expenses, an account for your taxes, and my favorite account is an account for your profit, or a bonus account. And the premise behind the profit account is that you're paying yourself a bonus, but you're doing it once a quarter. And that timeline is frequent enough that you get a good, nice little hit from your business as far as a bonus, but not frequent enough that it's just becoming something that you use to pay your bills every month. So when I take the profit from my business, I try and do something fun with it. So maybe it goes into my husband and I both have personal spending accounts too. So it's like our allowance account. We have fully combined finances, but like a little bit of freedom and flexibility to spend on what we want without it causing any rifts in the relationship because we have different values on what we spend our money on. So sometimes we just take that profit, divide it between those two accounts. Sometimes it goes towards a vacation or something fun. So it really is motivating because you see that once a quarter. It's an indicator of how your business has been doing. And having a separate expense account, I love the analogy in the Profit First book. And I do love the audiobook. I've read the book, but I've also listened to the audiobook. And I love how he puts his own spin on it. It's the author actually reading it, and he adds in those little anecdotes. But the analogy about the expense account being like a tube of toothpaste is like it really aligns with how I think. And when you have a tube of toothpaste and it's early on, it's brand new, you just open it up, you're usually a little more generous with it because the toothpaste comes out easily, there's no struggle. But when you get down to that last little bit, you work a little harder and you're more resourceful with how you use that toothpaste. And he links that to your expense account. So when your expense account is flush, you might be investing in coaching or a program or a new tool in your business. But when your expense account gets a little low, you're going to maybe spend time to review your monthly subscriptions, see where you can, skip on a service for a little bit. You get resourceful and you figure out how to make it work based on what you have in that account. And flipping it from paying yourself what's left over after you pay your expenses to contributing a specific percentage to your salary account to pay yourself. It's that pay yourself first for your business versus, what's left over. What am I going to pay myself? Oh, do I have any money left over? Is there any profit? You're prioritizing the things that create stability in your business and in your life versus, leaving yourself the leftovers in your business. So even when you're just starting out, putting a small percentage. So maybe you're in a business that you have a lot of expenses up front because you're just starting. Putting 1% into a profit account, putting 2, 3, 5% and paying yourself $20 a month. It builds those habits so that as your business grows, becomes more profitable, you can then continue with the system you have, just adjusting it so that you're able to allocate more to pay yourself and towards your profit. It's all about building those habits as early as you can.
Yeah, I was looking on the shelf. I think I listened to the audiobook too, because I don't see it on my shelf over there, except for the Profit First for Contractors, which is we figured out is not the contractors that I was thinking of. So I love Profit First. I love the idea of it. But you were saying, even when you're new, give yourself $20. But what if you don't have a profit? Like, what if you're spending more than you're making? What if you're expensive? Because I know, for example, like accountants, a lot of times have to buy this really expensive software to do taxes. And so no matter how frugal you are sometimes with your business, sometimes you have more expenses than you have profit, and then you have, income. So how do you recommend entrepreneurs sort of balance that in the beginning when they really don't have that profit to spend on themselves? I know you're talking about building habits and things like that, but what if there isn't anything for them to actually pay themselves?
And that is the reality for a lot of entrepreneurs, even service-based entrepreneurs, but even more specifically ones that are product-based because you've got to invest in inventory. So being able to have a plan for that and putting the numbers down on paper to see, okay, here's my investment in my business initially, and here's when I anticipate being able to make a profit and setting that goal, putting a reminder in your phone, to be able to pay yourself that profit, that even if it's a little bit, as soon as you're able to not, when new entrepreneurs start, we tend to kick paying ourselves down the road months and sometimes years because we think we have to do this, we have to do this. But the reality is that we can often create profit a long time before we think we can. I know lots of service-based businesses think, oh, I'm starting a business. I need a website. I need Facebook ads. I need a logo. I need a brand. I need all of these things. But we can do things a lot more quick and dirty than we think. And when I started my business, I think it was a year and a half before I had a website because honestly, I had no idea what I was doing. Not to say that it was the best path, but I was able to have a profitable business just through connections, having conversations with people, using social media without investing in ads and things like that. So there are ways to get to profit before we think we have to. The biggest one is the like branding, website, paying somebody $10,000 to build all that for you. And that is a great investment in your business, but it doesn't necessarily have to happen before you can start welcoming clients to your business and helping them with whatever service you provide. There's always a shorter path to profit for so many businesses.
Yeah, and that's a great example, right? Because I built my own website and I just bought a page builder and I did it in WordPress and it's super simple and it's not real fancy and I wrote all the copy myself with the help of AI and it's fine for now. Would I love to invest someone to actually make it more functional and write in it, do better see, I can't even say it. Have better copy in there and everything. Of course, but it's just not the priority right now. It's not where I want my money to go, and so that's not what I've prioritized. And I think you're right. Like, you don't need it to get started. Like, if an accountant needs that software to get started, but you don't need a website to get started. So I think it's all about balancing, like, what's the bare minimum that I can get by and start my business, and then start investing in more and more systems and processes to sort of make it easier.
Yep. And if it's a necessity, if I identify I need this type of system, is there a free or very low cost way to achieve that? And then down the road, you can invest in something that's more ideal to your business. So when I started, I very quickly identified having an online scheduler so that somebody could go into my calendar, see my availability, and book a time. Not only was it more efficient because we're not doing those emails back and forth. Well, how about Tuesday at 2? What does it look like? What are your availability Thursday? It helped me to create boundaries around my business because when you're new as an entrepreneur in a service-based business, you're like, I just want to, like, I just need to help anybody. Oh, yeah, I'll do a call at 11 p.m. versus, oh, here's a link to my scheduler and they find a time that works for them. It's more convenient for them. It automatically goes into my calendar, goes into their calendar. It just makes things a whole lot easier. But I did start with a free version to be able to put that into my business and save time, make things more efficient for both me and my potential clients. And then down the road, there's one that's very well suited. It does a lot of automations and things for me. I invested in it when it was available to me and when I could do that and still have a profit in my business.
Yeah, and that's a lot of what I actually talk about in my program, Process to Profit, is what's the bare minimum that we need to get by right now? Like, what processes can we build around this so that we don't need the expensive software, or what's a free version of the software that we could use for now to get started? That's a lot of what I talk about because I think people get overwhelmed and they think they need all the things and they don't know where to start. And so, helping them figure out, like, no, let's take a step back, look at the bare minimum of what you actually need to get started. So,
Yeah.
well,
And some of those programs, sorry to interrupt,
no,
some of
no.
those programs are so costly. So
Mm-hmm.
when you look at some like client managers that do, I invested, life lesson, I invested in one a few years ago and thought this is going to be great. It was going to do my email marketing. It was going to do my client manager. Well, and then I realized this doesn't make sense for me because I already have so much work in my current email marketing software. For me to take all of that and put it in here, it's not a valuable use of my time because I already have it. It's already working. Yes, integrating those two things together might be great, but I already had two systems that were lower cost that were working independently. So, and again, when you're making those decisions, think about, am I going to actually use it? And if you do invest in something and you realize early on, it's not for me, I know we can put barriers up for ourselves to think about, oh, well, they're not going to give me my money back. Why would I try? but they did in fact give me my money back. I just said, like, you know what, this isn't working. I know I'm this far in. Would you be able to refund the remainder of the year? And they're like, well, we see you haven't been using it, so here's a refund of the full amount.
Yeah.
Thank you.
Yeah.
And it just took an email.
Yeah. And that's also what I've helped my clients with. Like, one of my clients wanted an email service and she was paying for one. And I was like, well, this free one does things and it actually does it better. And she was able to email them and get her money back. And I have a lot of opinions around those all-in-one systems. I know they're very popular right now, but a lot of them don't do things well. Just because they do everything doesn't mean it does everything well.
Yep.
And they're very expensive. And so I'll get off my soapbox, but I have a lot of thoughts and opinions on it.
What and putting specialized things together, that like this is just email, this is just client management. You're right. When they're specializing in just one thing, they can often work a lot better and have a lot more flexibility for us to set it up the exact way that we want it.
Yeah. Yeah. Well, this has been a wonderful conversation, Sherry. Thank you so much. If there is one piece of advice that we haven't discussed yet, or something you want to reiterate, what is it? What would it be that you would want to leave our listeners and viewers with?
Oh, it's definitely a reiteration. Look at your numbers. Rip off the Band-Aid. Know that if you think you're in a challenging position, you think you're a mess, looking is going to create more calm in your mind, because it's going to then be able to allow you to see what your reality is versus creating these false realities in your mind. So just looking at your numbers, getting a clear picture of where you stand is huge to allow you to then think about next steps. So just think about the one step ahead of you. And if you're in avoidance mode, that one step is let's look at my numbers. Let's see where I am. Let's see what my debts are, see what my spending is like, and start there without thinking, okay, what are the next steps then? Just take one step at a time.
Yeah, great advice. And I'm hearing it and realizing I need to go look at my numbers. I did look at them last week, so I'm not that far behind. So, well, thank you again so much, Sherry, for being here. If people want to reach out to you, what's the best way for them to do that?
The best way to connect with me is on Instagram through my business page, which is Money Mindset FC. And I share lots of tips around money. I talk a lot about ADHD, about my experiences, and being able to give those little tips here and there. I try to give very small steps for people to do when they are in that avoidance mode to help them get out of it and start to turn the page.
Great. And do you have a free gift for our viewers and listeners today?
I do. I have a resource that is geared for the ADHD entrepreneur to be able to start to put your numbers together on the business and the personal side and start to build out your systems for that profit first percentages and what they look like in your businesses. And the nice thing is it does the math for you. It allows you to plug your numbers in. And one of the barriers is often, well, I don't know where to start. I'm going to miss things in my budget. So having a template where it says like, oh, did you think about annual vet expenses on the personal side? It helps you make sure you're not creating a budget with big gaps in it, which is often one of the challenges when people do start budgeting, is that we have a lot of gaps. And when those real life expenses come up, we tend to throw our arms up and be like, budgeting doesn't work. It didn't consider this. Well, it's not that budgeting doesn't work. It's that we miss some things, which is completely normal. So this really helps to make sure there's fewer gaps in your plan.
All right, great. And I will make sure to link your Instagram and that gift below and in the show notes.
Perfect.
And again, thank you so much for being here. I really enjoyed talking to you, even though money can sometimes be an uncomfortable subject for people. I think it was very informative for our listeners and viewers.
Awesome. Thanks so much for having me.
All right. And thank you guys for watching and listening, and I'll talk to you again soon. Bye.